Okay, dear students, we will now continue with the topic on salaries and income tax. We have covered different types of allowances and taxability of the same, and we have few more things to cover. So we will now take up exemption in respect of leave encashment. So leave encashment is basically if an employee is eligible for an annual leave, if he doesn't avail the annual leave, and the employer will give him a cash equivalent of the unavailed leave, which is referred to as leave encashment or leave salary. So leave encashment received during service for government employees or non-government employees, it's fully taxable. There is no distinction on that. So accumulated leave can either be encashed during service or at the time of retirement or resignation. Any leave encashed during service is fully taxable, and it forms part of income from salary for all categories of employees. So I'll add it here for all types of employees, okay, for all types of employees, that is whether he is a government employee or non-government employee. Leave encashment at the time of retirement or resignation, normally for central or state government employee, it is fully exempt from tax. Very important. But in case of a private sector employment, it is taxable subject to limits. So leave encashment received at the time of either retirement or resignation is either fully or partially exempt depending upon the category that an employee falls under. And leave encashment received by central government or state government employees at the time of retirement or resignation is fully exempt from tax. However, leave encashment received by non-government employees is exempt based on section 10AA clause 2, and we'll go through that now. And leave encashment received by legal hires of the deceased employee is also fully exempt from tax. Now, with respect to non-government employee who is getting leave encashment at the time of retirement or resignation, it will be taxable based on the limits we are going to cover now. So let us look at this carefully. I'll give you a format here. Formula for computing leave encashment exemption of non-government employees, that is private sector employees. Actual leave encashment received, let us assume whatever X amount, and less exemption we have to calculate, which is least of the following. Amount notified by government 3 lakhs. Actual leave encashment received X amount, because this is the maximum limit prescribed by government, which is 3 lakhs. And I'll add one more point here. Whatever in the earlier employment, if an employee has already received any exemption, that amount will be reduced from this limit of 3 lakhs. For example, let us say Mr. X, an employee, was earlier employed with A Limited. He already got leave encashment at the time of resignation, and he got 1 lakh exempted. So that exempted amount will be reduced from this figure of 3 lakhs, and this 3 lakhs will become 2 lakhs. For all practical purposes, understand this carefully. Otherwise, it is 3 lakhs. Then actual leave encashment received, an average salary into last 10 months. That is average salary of last 10 months. You have to consider it. And salary per day into unutilized leave, and 30 days leave per year for every year of completed service. So average salary we have to calculate into 10 actually. I'll put it as last 10 months means you have to take the average of last 10 months salary, and salary per day into unutilized leave for every year of completed service. Then that is the least of the following will, once it is exempt, the balance becomes taxable. So let us understand this a little more carefully. Salary for this purpose means basic salary, because we are talking about salary per day here. Carefully observe, salary per day. So basic salary, DNS allowance forming part of salary, and commission based on a fixed percentage of turnover secured by employee. So all these three are components of salary. And as I just now mentioned, specified amount of 3 lakh is aggregate amount of exemption that is allowed under this section. And if an employee has already utilized, let us say 2 lakhs at the time of his earlier employment, then now the available balance 1 lakh will be the limit. The overall exemption that an employee can avail under this section cannot exceed 3 lakhs. Let us take an example here. Mr. A is retiring after 15.5 years of service. Mr. A was entitled 35 days of paid leave per annum from his employer. So 15.5 years of service at 35 days per year gives him an overall 542 days of leave during his entire service. Out of the same, Mr. A has already utilized 200 days of paid leave and is left with 342 days of unutilized leave. Mr. A was drawing a basic salary plus DA of 33,000 per month, and at the time of his retirement, he received 3,76,200 as a leave encashment based on 342 days into 1,100. How this 1,100 is calculated? Look at this carefully. 33,000 by 30 days gives you 1,100 per day into 342 days. He has received a leave encashment of 3,76,200. Are you able to understand this? Okay, now we have to find out what is the amount exempted. Now, as I just now mentioned, leave encashment actually received is 3,76,200. Less exemption is 2,75,000. Exemption is least of the following. Amount notified by government 3 lakhs. Leave encashment actually received is 3,76,200. Average salary for 10 months is 33,000 into 10, 3,30,000. Now very importantly, this is an important point. Though the employer may give him eligibility of 35 days or 40 days or whatever it might be, but his eligibility under Income Tax Act cannot exceed 30 days in a year. So his leave encashment cannot exceed 30 days in a year. So eligible leave is 30 days into 15 completed year of service and minus 200 days of utilized leave. Balance is 250 days into 1,100. That is 1,100 per day is his salary. So that gives him 2,75,000. So out of the total limits prescribed here, so amount notified by government, if you want to call it as 1, actual amount received encashment is 2, average salary if you want to call it as 3, and out of this whichever is least will be exempt from tax, which is 2,75,000. So he is receiving 3,76,200, but exempt is 2,75,000, and the balance becomes taxable. 1,01,200 becomes taxable. Now another important point with respect to leave salary, now the completed year of service you have to consider for calculation purposes. So this is something you need to be very clear, and part of the year will be ignored. Okay, now I hope you understood this leave encashment, which is an important aspect in income from salaries. So let's take further step into moving into generally what is the meaning of the term perquisites under Income Tax Act under the head salaries. We have to understand perquisites. To make it very simple, perquisites means non-cash benefits. Normally, so far whatever we have seen is all in the form of cash benefits given by employer to employee. Either it be basic salary or DNS allowance or HRA or any allowance for that matter. Whatever allowances we are talking about, allowances are normally on cash. Cash means cash check or whatever form. These are all paid in cash by employer to employee. However, there are a lot of non-cash benefits which are given by employer to employee that are referred to as perquisites. To give you a best example, free food, right? Employer will give free food to employee while in job, or he can be given a rent-free accommodation, or he can be a car with driver or without driver for both official purposes and personal purposes. So perquisites are of different types. Very importantly, he can be given a loan at a concessional rate for house loan or car loan, or he can be given a free interest-free loan also. In all these cases, dear students, carefully remember, we have to value the perquisites as per the provisions of the Income Tax Act. There is a definition for perquisites under the Income Tax Act. We will go through that now and also understand different types of perquisites. So perquisites may be defined as any casual emolument or benefit attached to an office or position in addition to salary or wages, and it also denotes something that benefits a man by going into his own pocket. Perquisites may be provided in cash or kind. Primarily in kind, dear students. Cash very rare. Okay, if it is a cash, like for example a cash gift, etc., then that's also a type of a perquisite, but definitely 90 to 95% of the perquisites are non-cash based. Okay, so perquisites are taxable under the head salary, but we need to know how to evaluate it. The basic conditions are: it is allowed by an employer to employee, allowed during continuance of employment, and directly dependent upon the service, and resulting in the nature of a personal advantage to the employee, and derived by virtue of employer's authority. So these are all some fundamental aspects of perquisites. Another example I can give you about perquisite is, let us say the employer is going to give you free electricity, or employer is going to engage a watchman or a person at your residence, and he is going to pay the salary for watchman. In all these cases, it is referred to as perquisites. Now, so it's not necessary that perquisite should be recurring or regular. Even a non-recurring payment or anything of that nature is also referred to as a perquisite. Basically, we have to understand certain things for the purpose of understanding perquisites. It is included in salary income only if they are received by an employee from his employer, and perquisites received from person other than employer doesn't get covered under the head income from salary. It goes to the head called income from other sources, and it is a benefit or an advantage, and it would be taxable only if it has got a legal origin. An unauthorized advantage taken by an employee without employer's authority would create a legal obligation to restore such advantage, and it would not amount to perquisites under the Act. On the other hand, if the benefit has been conferred unilaterally without aid of an agreement between the parties, the employee can be taxed on the perquisites. It is not necessary the benefit should have been received under an enforceable right. So employer can choose to give a benefit in any form, and everything comes under the head called perquisites, which is taxable in the hands of employee as long as there is an employer-employee relationship, and as per the terms of employment, if it is provided for, it is taxable under the head called perquisites. Now let us take up the definition, very important definition under the Income Tax Act, perquisite section 17 subsection 2. What are the various items included under the term called perquisite? So under the Act, the term perquisite is defined under section 17 subsection 2 as including the following items. So it's more of an inclusive definition, so it can include anything else also. The value of rent-free accommodation provided to assessee by his employer, very very important, dear students. So many cases, many times, employer particularly for people who are in a senior level position, they will be given accommodation which is rent-free accommodation. Now there is also another thing we discussed earlier called HRA, house rent allowance. House rent allowance is an allowance given by employer to an employee to meet his rental expenditure, and that is normally given for all types of employees, no doubt. But this rent-free accommodation in the nature of a perquisite is also given to different types of employees. For example, let us say somebody is working in RBI. RBI has got quarters, so they'll offer quarters for staying purposes. Or somebody has got a township, let us say Tata Steel. Tata Steel has got a township and they've got a number of houses built for the employees' benefit. So the employees will get houses allotted and they can stay there, and it is basically owned by Tatas, but the employees are staying there. So that is another classic example of rent-free accommodation, for which we need to know how to arrive at the value for taxation purposes. So the first and foremost prominent type of a perquisite is the value of rent-free accommodation provided to the assessee by his employer. Secondly, the value of any concession in the matter of rent in respect of any accommodation provided to the assessee by his employer. So very importantly, the word concession under the Income Tax Act means that any benefit provided by employer to employee and any amount recovered from employee towards that, then it becomes concessional. So in this case also, if employer is going to provide a rent-free accommodation and is going to recover some amount from employee, it becomes concessional. So the word concession means some amount is recovered from employee. And the value of benefit or amenity granted or provided free of cost or at a concessional rate in any of the following cases. Dear students, carefully understand this. In income tax, for the purpose of taxation, particularly when we talk of salaries, we have two types of employees: specified employees, non-specified employees. Now the definition of perquisites, normally to put it simple, let us say directors of a company are specified employees. Okay, because they are senior most people or they are topmost people by way of position, and whatever salaries they get, they are categorized under the head called specified employees. So we are going to cover four types of employees who are coming under the category called specified employees. In all these cases, benefits provided to specified employees, it is taxable as perquisites. What are those? By a company to an employee who is a director thereof. By a company to an employee being a person who has a substantial interest in the company. Generally, this term substantial interest is very very important. To give you an example, substantial interest in the company means something like he has got at least 20% share in profit or 20% voting power in a company. That person is said to be a person having a substantial interest, and anything received by a person having a substantial interest in the company, it is coming under the category called perquisites. Then by an employer including a company to an employee to whom provisions of above 1 and 2 do not apply and whose income under the head salaries exclusive of the benefits or amenities exceeds 50,000 per year. So third category of employee whose salary exceeds 50,000 per year, he is also coming under the category called specified employees. So any benefit provided by employer to the specified employees gets taxed under the head called perquisites, and any sum paid by employer in respect of an obligation which but for such payment would have been payable by the assessee. Very very important, dear students. Now this is what I keep saying, employee's obligation met by employer is a perquisite. Now let us say, for example, I have a benefit provided to me as an employee. I have a accommodation. In accommodation, they are also providing me free electricity. Normally the electricity charges are to be paid by me. It is my obligation, but my employer is meeting my obligation. Whenever employee's obligation are met by employer, that is a perquisite and taxable. The value of that is taxable. Any sum payable by employer, whether directly or through a fund other than a recognized provident fund or approved superannuation fund or a deposit linked insurance fund to effect an insurance or assurance on the life of the assessee or to effect any contract for an annuity, comes under the head called perquisite. So it's very simple. Any amount contributed by employer other than for recognized provident fund, other than for approved superannuation fund, it comes under the category called perquisite. Okay, the value of any specified security or sweat equity shares allotted or transferred directly or indirectly by employer or former employer free of cost or at a concessional rate to assessee is also taxable under the head called perquisites. To put it in a simple term, the value of any ESOP, what we call employee stock option plan, given by employer to employee, that value is taxable under the head called perquisites. Okay, the amount of any contribution to an approved superannuation fund by employer in respect of the assessee to the extent it exceeds 1,50,000 rupees. So any contribution by employer even to approved superannuation fund, if it is above 1,50,000 rupees in a year, that comes under the head called perquisite. That gets taxed under the head called perquisites. The value of any other fringe benefit or amenity as may be prescribed also comes under the definition of perquisite. So this definition of perquisite is very important because it's a major component of salary apart from allowances. In allowances there are different types of allowances. I told you allowances under section 10 subsection 14 there are 6 allowances. In those allowances, whatever allowance the employer gives to an employee, the employee whatever he spends for official purposes, that is deductible, balance is only taxable. Whereas in respect of the allowances provided for under rule 2BB, the limit is prescribed under rule 2BB. To that extent the allowances are exempt. The balance excess if any will be taxable. These are all the broad classification of the two types of allowances. Now very importantly, if an employer is going to give any allowance other than what is given in 1014 or rule 2BB, the entire allowance becomes fully taxable. To give you an example, let us say an employer is going to give a tiffin allowance to employee. The tiffin allowance is fully taxable. Let us say an employer is going to give some other allowance by whatever name call which is not falling under 1014 or rule 2BB, that amount of allowance is fully taxable. So the basic point you need to remember is you have to break up the salary into broadly 3 parts, basic and DA. Dearness allowance is also a type of allowance. So basic, dearness allowance and allowances under which is called as special allowances, section 10 subsection 14, and allowances covered under rule 2BB. These allowances are subject to exemptions, no doubt, but any allowance given which is not covered here is fully taxable in the hands of employee. Apart from the allowances, as I said, the major component that gets taxed in the hands of employees, perquisites, which is what we are going through now. Hope you have understood it clearly. So these are all the 8 types of perquisites which are given or possibly that can be given by. See, look at this 8th point. It's like sundry point. The value of any other fringe benefit. That's what I said. No car, interest-free loan, or anything, medical benefit, anything employer can give to an employee, all those are covered here under point 8. That comes under the category called perquisites. Okay, so let us now take up an important item of perquisite, valuation of rent-free accommodation unfurnished given by employer to an employee. Now dear students, as I said just now, employer can provide a rent-free accommodation to all types of employees without any senior or junior level, depending on the nature of the job. Okay, now I am going to give you the simple presentation here to make you understand. Case 1 for government employees, it is a license fee fixed by government. Let us say Mr. X is working in CPWD department, Central Public Works Department of Central Government, and is being given a accommodation in the form of a quarters in Chennai. Now, how you should value that? Very important. The valuation is fixed by government in the form of a license fee. So annually the license fee is 10,000 rupees or 20,000 rupees or whatever it is. That amount becomes the value of perquisite, taxable in the hands of employee. Are you able to understand? So it's very simple. So that is going to be given to you. You need not memorize any number here. The license fee fixed by government is what is the basis for valuation of perquisite in respect of rent-free accommodation in relation to a central government or state government employees. Coming to case that is for non-government employees, that is employees working in private sector. Now we have to basically classify this into further 2 parts. If an accommodation is owned by employer, that is, as I said in Tata Steel case, Tata Steel, the employer owns a building. So if population is less than or equal to 10 lakhs. So here the valuation of perquisite is based on the population in the place where the accommodation is provided. So if it is less than 10 lakhs or equivalent to 10 lakhs, it is 7.5% of salary. And if it is accommodation is owned by employer, okay. And if the population is more than 10 lakhs but less than or equivalent to 25 lakhs, it is 10% of salary. And if population of the place is about 25 lakhs, then the value of perquisite is equivalent to 15% of salary. In this case, the valuation of perquisite is based on population. Normally for population purposes, You all know if it's a metro city, etc., it falls into the third category, like population is about 25 lakhs. But otherwise, if it is like a place like Coimbatore or Indore or whatever it is, they will indicate the population to you in the question itself. So no need not memorize anything on that. You can easily pick up that population limit, apply that here and arrive at the value of the perquisite. So it's straight away, it's a percentage of salary. But if accommodation is taken on hire by employer or taken on lease by employer, but it is not owned by employer, then the valuation of perquisite is actual lease rent paid or payable by employer or 15% of employee salary, whichever is less. Okay, so the ownership is very much important here, whether it is owned by employer or not. Accordingly, the value of perquisite will be determined. Now, very importantly here, the meaning of salary is something we have to understand. So the above value of perquisite is in respect of unfurnished accommodation. Now sometimes it may so happen that the employer will provide furnished accommodation. If it's a furnished accommodation, to the above value you should add 10% of actual cost of furniture for every year if it is owned by employer. So I'll repeat, the value of perquisite in respect of rent-free unfurnished accommodation is arrived at as I just explained. But if you are going to arrive at value of rent-free furnished accommodation, then you need to add this to the value of unfurnished accommodation. So value of, so let me put it this way. We need to add the cost of furniture to the above. So if furniture is actually owned by the employer, you need to add 10% of the actual cost of furniture for every year. Or if furniture is actually taken on hire or lease, then you should take the actual cost, actual hire charges or lease cost. And very importantly, we just now discussed it's based on percentage of salary. How to arrive at the value of salary? The meaning of salary for this purpose is basic salary. You need to add dearness allowance to the extent forming part of salary for retirement benefits, bonus, commission, fees, all other taxable allowances excluding the exempt part, and all monetary payments by whatever name called. Okay. So it includes all other taxable allowances excluding the exempt portion, all monetary payments by whatever name called. So it's quite an exhaustive definition of meaning of salary for the purpose of valuation of perquisite, particularly rent-free accommodation. So we need to add up all of these components to arrive at the meaning of salary. On that you have to apply the percentage of 5% or 7.5 or 10%. What is not included in salary is dearness allowance to the extent not forming part of salary for retirement benefits. Employer's contribution to PF will not be included. All allowances which are exempt from tax will be excluded, and value of perquisite shall be determined. And for this purpose, value of perquisite shall be excluded, and salary to be determined on accrual basis, and any advance salary shall not be included in the meaning of salary. And if furnished accommodation is provided in a hotel or motel or service apartment or a guest house, very importantly you need to understand this. It is quite possible that an employer will provide to an employee furnished accommodation in a hotel also, because it may not be in a house but it may be in a hotel or motel. In that case you need to value the perquisite as 24% of salary paid or payable during the year which accommodation is provided, or actual charges payable by employer to such hotel, etc., whichever is lower. So the valuation of perquisite will undergo a change if it is not in house but it's in a hotel or motel. So imagine that in a place there is no such accommodation available, then the employer will be providing accommodation in a hotel or motel or a service apartment. In that case, this is the basis on which valuation shall be done, and any amount recovered from employee towards above perquisite, you should understand that it will be deducted, and the balance is what is taxable. That is why we call it as concessional rate. Whenever some amount is recovered from employee, we call it as at a concessional rate. Now coming to valuation of perquisite in respect of free domestic servants like sweepers, cleaners or watchmen, etc., the actual cost to the employer shall be the value of perquisite. And similarly, valuation of perquisite in respect of gas provided to employee, electricity or water supply, actual expenditure or cost to employer shall be the value of perquisite as reduced by any amount recovered from employee. And coming to free education, in many cases the employer will also provide education facility to employees' children. In that case, how to carry out the valuation of perquisite? Expenditure actually incurred relating to providing training to employees is not taxable. That is not at all taxable. So if as an employee you are going to get any training from employer, that is not taxable. However, if education facility is provided to the family members of the employees, like particularly their children, expenditure incurred by employer is fully taxable as a perquisite, and payment of tuition fee or reimbursement of tuition fee is always chargeable to tax. Education facility. Okay, so let us say Mr. X is employed and he is putting his child in a private school, and there is a fee paid by him, and the employer is paying the fees or reimbursing the fees. The entire amount is chargeable to tax. If education facility is provided to children of employee in an education institution owned or maintained by employer, very very important. In many cases, again I'll take the Tata Steel example. Tata Steel will be owning and maintaining schools. Then reasonable cost of education in a similar institute in or near the locality will be considered, and this will apply even if the education institution is owned by employer or where such education facility is provided in any institute having an arrangement with the employer. Now dear students, you should understand this very carefully. Now there are two possibilities. One is the school is maintained or owned by employer, or the employer has got an arrangement with some school, local school, and arrangement with the employer, and based on the arrangement the employee's children are studying in that school. Both are perfectly okay. In that case, the value of education up to ₹1000 per month will be exempted. The balance will become taxable. So what does it mean? Let us say, for example, Mr. X is working in Delhi and he is putting his children for education in a school which has got a tie-up with the employer, and the employer pays the school fee for the children. Okay, in that case, what is exempted is only ₹1000, and balance will become taxable. If the employer is going to pay, let us say, annual fee of 50,000, what is exempted is only ₹1000 per month per child, so it works out to 12,000. The balance becomes fully taxable as a perquisite. However, if such education facility is provided to any other family members of the employee other than children of the employee, that is fully taxable. So there are two important points you need to understand here. That's why I've highlighted here. If the school or institution is owned or maintained by employer, or if the employer is having an arrangement with the employer, with the school, then what is value of education up to ₹1000 per month per child is not taxable. Means what? That is exempt. The balance is taxable. Clear? Very very important provision. Okay, so this is how we need to understand the taxability of free education. I hope you have understood this very very important set of points under perquisites. Now with respect to valuation of perquisites, kindly go through these provisions carefully and let me know if you have got any doubts. As I said, there are quite a few perquisites which can be provided by employer to employee. We are discussing one by one. So already we discussed a few. Today we have covered a few more aspects of it, and I would recommend you to go through the provisions in detail, because the point is, since there are many perquisites, you need to be familiar with them as to taxability of the same one by one, so that it becomes easy for you to understand it. Okay, so kindly go through this and let me know if you have got any doubts regarding whatever regarding the perquisites we have discussed, and I'll be too happy to clarify your doubts, and I'll catch up with you in the next session very soon, and take care.